Introducing the heavyweight tech giant of the world, hailing from Menlo Park, California. My new favorite stock. Before it was the Trade Desk, then it was Virgin Galactic, and now it is none other than the crowd favorite, Facebook. In this video, I'm giving you 9 reasons why you should buy Facebook. And those 9 reasons will be separated into recent news, long-term drivers, and expansion opportunities. Then we'll talk about some risks. Spooky. Go ahead and say it with me in the comments below. Let's do it. What's going on, everybody? My name is Matthew, and today we're talking all things Facebook. Now, I guess I didn't get the memo because a lot of finance channels have been covering Facebook lately, and I didn't realize that until I started writing the script for this video. However, I'm going to be talking about some opportunities that Facebook is chasing that I haven't really seen addressed super in-depth in other places. These would be things like Libra, Facebook gaming, and so much more. So here's the format for today's video so you know what you're getting yourself into. 4 parts, 9 reasons to buy, and 3 risky risks. My goodness, that's a lot of digestible research. Part 1 is going to be 3 reasons to buy based off of recent news. Part 2 is going to be 4 reasons to buy based off of long-term trends and drivers that have been working well for Facebook. And part 3 is going to be 2 areas where Facebook is looking to expand and move into next. Then part 4 is going to be 3 risks that I see with Facebook. Something we like to do on this channel is cut right to the chase, so part 1, reasons to buy based off of recent news. Reason 1 is Q1 2020 results. But Matthew, these quarterly reports came out weeks ago. I know, but I wanted to get this one out of the way first so that we can accept the next 8 reasons to buy with a sound peace of mind and know that they are financially sound. And trust me, the financials are more sound than Puget. Get it? Puget Sound? No? Let's jump right into the balance sheet, and bear with me, guys. This part of the video is going to be a lot of text, a lot of photos, but I promise once we're done with this, the entertainment value will come back. Let's start with the basics. Facebook has about $60 billion in liquidity if you combine their cash with their marketable securities. This is really good. And they have $69 billion in current assets. Compare that to their current liabilities, which is only $15 billion. And this is one of the reasons why Facebook has one of the best balance sheets in the world. This basically means that even if Facebook just stopped making money, financially, they'd be okay for a while. And their total liabilities is only $33 billion. And you might be thinking, Matthew, when is anything only $33 billion? Well, when you compare it to their $60 billion in cash, they have almost double the amount of cash as they do in total liabilities. That is fantastic. I want to kiss it. Additionally, their net income is up about 102% year over year at $4.9 billion. Absolutely absurd growth for such a large company, especially when compared to the rest of the S&P 500, who saw negative 14.22% in net income growth in Q1 of 2020. Beyond their balance sheet, Facebook also released some slides with their Q1 2020 report, so let's take a look at those because they're super visually helpful. In particular, I want to look at their revenue. You're telling me that with this whole pandemic, Facebook's revenue was only set back to Q3 of 2019? Not to mention, ad spending is usually highest in Q4 because of seasonality like Christmas. If someone showed you this back in December of 2019 and said, this is what Facebook's revenue will probably look like in Q1, you might say, okay, sure, that kind of makes sense. You probably would not expect there to be a raging global pandemic. If anything, this is serious tangible evidence to prove that the pandemic is really not having a huge impact on Facebook's business model. This could also be in part thanks to reason number 2 to buy Facebook. People are working remotely. With all the changes that have been made to the workplace recently, Facebook is now saying that half of their employees may work remotely by 2030. Now, obviously, this is great for current situations in terms of safety, but even beyond this pandemic, even if this all ends, they're still going to have people work from home. Obviously, this is going to help in terms of saving money, cutting costs on things like office leases, but on top of that, there's an added benefit. Simply put, this means that Facebook can now recruit talent that previously did not want to move to places like Silicon Valley, which have a very high cost of living. Let's do some math here. Better talent plus Facebook equals better company. But this one I'm honestly a little skeptical about. I mean, will people be as productive when working from home? Will they be as motivated? Will they be as inspired? Will communication be disrupted? Will ideas flow as seamlessly as they do in in-person meetings? I mean, I always say that if I have a day at home alone, I'm gonna get a ton of work done, but
why you always lying?
Only time will tell. But speaking of time, we have to move on to reason number 3, Facebook Shops. And this has been all over the news lately. Facebook is creating Facebook Shops and Instagram Shop, a new way to shop on their Facebook and Instagram platforms. It includes live shopping capabilities where stores can have live streams with their products linked below. It also includes loyalty programs for stores. And possibly the biggest news, it's working with partners including Shopify, WooCommerce, and more. There's no questioning that this is going to be huge for Facebook. There's one article that even suggests that Facebook Shops can do something that Amazon cannot: provide discovery. Their point here is that Amazon is great, but it's only really great for those who know what they want when they get to the site. But Amazon is not great for browsing. I never really find myself saying, I'm just gonna go shopping online. Let's see what Amazon is gonna offer me. I've never done that. I don't know if you have. If you have, comment down below. I'd love to know why. So if only there was some sort of company that had tons and tons of data about us, that knew us scarily well, and they knew when and where to place ads in front of us. Oh wait, Facebook. This is how I kind of see Instagram Shop working. So imagine you're on your Explore page on Instagram, and if you don't know already, all of the content on your Explore page is tailored to you. It's specific to you, and that's how they try and get you to stay on the app longer. But now, instead of scrolling on the Explore page and seeing posts, you're seeing products and shops that are tailored to you. So everything you see is probably something that you might want to buy. And if I ever feel the urge to shop, I know exactly where to go. And we already know that Facebook's ads can target the right people with deadly precision. Otherwise, they wouldn't be worth hundreds of billions of dollars based on their advertising business. So now they're putting products in front of us with deadly precision. On top of that, they have a user base of over 1 billion active users every month on Instagram. And if you didn't already know this, Facebook owns WhatsApp, and of course they own Facebook Messenger, which they plan to integrate into Facebook Shops and Instagram Shops. They've created an entire ecosystem where you can have this extremely personal shopping experience all within Facebook-owned services, apps, and software. And now it's time for part 2 of this video, long-term drivers that are reasons for why you should buy Facebook. And by long-term driver, I just mean something that Facebook has been doing for a while now that shows strong, consistent growth or still shows a lot of potential. We've got 4 of these for you here, and since we just talked about it, we'll start with this one. WhatsApp. WhatsApp is the most popular messaging app in the world, and it's not even monetized with ads yet. It has 1 billion daily users, and the average WhatsApp user spends 195 minutes on the app each week. That is so much time to be spent looking at Facebook ads. Now they're incorporating it into Facebook Shops, which could potentially mean that we're going to start seeing some ads there for that as well. I feel like I don't have to say much here, because we all know that once Facebook, one of the most effective and widely used advertisers in the world, decides to monetize the most widely used messaging app in the world,
it's game over.
I see this as a long-term driver because Facebook bought WhatsApp many years ago, and it's been in this app, developing it for many years into something incredible, something extremely successful. And now it is a potential catalyst to drive Facebook up even further once they decide to monetize it with ads. And this is a smooth segue into my second long-term driver and fifth reason overall for why you should buy Facebook. They're absolutely stellar at making acquisitions. Facebook either acquired WhatsApp for $19 billion or $22 billion a few years back. And they say it's kind of hard to put a valuation on it because it is a part of Facebook now. But in the initial acquisition, they also say that Facebook paid about $42 per monthly user at the time of the acquisition, if that makes sense. So assuming the price per monthly user is the same today, and Facebook has 2 billion monthly users, 2 billion times $42 per monthly user is $84 billion. Facebook also bought Instagram for $1 billion, and now it's worth $100 billion and more. Facebook has made over 80 acquisitions by now, and many, if not most of them, have been successful. A lot of them are acquisitions to acquire talent, not necessarily the company, but either way, Facebook has met its objective. And with over $20 billion in cash and almost $60 billion if you include marketable securities, I'm excited to see where they buy next. And before we get into the third long-term driver and the seventh reason why you should buy Facebook so far, if you could drop a like for this video if you found any value, because these videos, although I love making them, do take a really long time to research, record, and edit. I'd really appreciate it. Thank you so much. The third long-term driver, Facebook isn't dead. And you're probably thinking, Matt, what the heck? Yes, of course Facebook is not dead. Okay, well, what do I mean by saying this? Personally, and maybe this is just me being the dumbest little boy in the world, but I thought the platform itself, like Facebook.com, was kind of meh. And looking back, this is just me being a silly little Gen Xer or whatever generation I am, and thinking that, oh, none of my friends use Facebook, so it must not be growing that fast. But boy, am I wrong. Their daily active users have not stopped growing, with 1.7 billion daily users on Facebook alone in Q1 and 2.6 billion monthly active users for Facebook. Now, this is probably super narrow-minded and short-sighted of me to even think that Facebook's growth would suddenly stop, but if there's anyone else out there who had the same thought as me, this point is for you, my friend. And the fourth and final driver, the seventh reason overall why you should buy Facebook, and maybe the most obvious, advertising. Matt, obviously advertising is a reason to buy Facebook. Of course, everyone knows Facebook's advertising business is off the charts, but I want to put this into perspective for you guys and hopefully just blow your minds a little bit. When it comes to advertising, value is measured in eyeballs, and Facebook has 2.36 billion of them. 2.36 billion pairs of eyeballs are looking at an app or service that Facebook owns every day, and nearly 3 billion every month. Do you know how many people are in this world? About 7.8 billion. You're telling me that one company is reaching over a third of the world's population. As you can see, these numbers are just on a steady climb. It's absurd. And as Facebook gets more users, their data will only get better, their audience will only grow, and the premiums they can charge on their advertising will only go higher. So yeah, I'm sorry that I gave you a couple pretty obvious ones. Those last two were, kind of lobs. But this right here, right now, what I'm about to talk about, part 3 of this video, expansion opportunities, is why you're watching this video. Facebook is starting to diversify. So where are they looking next? We've got two things on the list here. Libra, their cryptocurrency or digital currency, and Facebook Gaming, their streaming service. First is Facebook's Libra, their cryptocurrency. Some call it a digital currency, but for simplistic reasons, we'll call it a cryptocurrency. It's expected to release this year in 2020. Now, I don't want to spend too much time on this one because it's very confusing and I want to explain it well. So if I were to do that, it would take probably another 3 to 5 minutes of this video. It's also still in its infant stages, so there's only so much data that I can talk about, but it is extremely, extremely important to mention in my opinion because it shows that Facebook is getting into a completely new sector and it's potentially creating another revenue stream. To put it simply, Libra's mission is to try and make banking more accessible and affordable to people around the world. Many people out there are paying some ridiculous fees. Facebook gave an example saying that some people pay $30 just to borrow $100. Now, the amount of information I have on Libra would probably be a separate video on its own, so if you want that video, comment down below. But for the purposes of this video, I'm just going to say a couple quick things and we'll move on to the next point. Libra could potentially become more popular than the US dollar, and people have said this about Bitcoin, but there's a couple of reasons why it's more realistic for this to happen with Libra than Bitcoin. The main reason why Libra is more realistic is because it's actually pegged to or based on real tangible assets, whereas Bitcoin is based on pretty much nothing. It's just based on the supply and demand of Bitcoin from us. Libra has reserves of assets that it bases the value of Libra off of, and these reserves are monitored by about 100 companies, not banks. Facebook makes money from Libra by collecting interest. So in the simplest way I can explain it, if I go buy $500 worth of Libra, then Facebook gets my $500, I get my Libra, then Facebook starts collecting interest on that $500 and they get to keep all that interest. They'll collect that interest until I come back to exchange my Libra for US dollars. And if everyone starts using Libra, Facebook will obviously have a huge reserve of cash that people have exchanged for Libra. So they'll be collecting a lot of interest on a lot of money. But now we're moving on to the second opportunity for expansion from Facebook and our final reason why you should buy Facebook stock. And that is Facebook gaming. Allow me to dress properly for this part of the video. What's up, guys? Welcome to my stream. What's going on, guys? Today we're going to be talking about Facebook stock. Facebook gaming is a big deal, and I'm honestly surprised that a lot of other videos haven't touched on this. Facebook has entered the gaming streaming wars against the likes of Twitch, YouTube, Microsoft Mixer, and a lot more. And while it pales in comparison to the obviously dominant player in this space, Twitch, Facebook gaming has shown some very impressive growth. In fact, it grew over 210% in 2019 alone. This 210% statistic was measured by the difference in hours watched on Facebook gaming between December 2019 and December 2018. This means that Facebook actually had an impressive 8.5% share of all the watch hours on gaming streaming services. I'd say that's not a bad start. And with the gaming industry valued at $120 billion in 2019, some analysts see the industry growing to $300 billion by 2025. Facebook has taken a more global approach to expanding its streaming service by signing a lot of players in places like Latin America, Europe, and other areas around the world. But two of their most distinguished and notable additions to Facebook gaming are Disguised Toast and Corinna Kopf. Jeremy Wong, aka Disguised Toast, left Twitch with over 1 million followers on that platform to join Facebook gaming. And he said, quote, "I've received an offer from every major streaming platform, but I believe Facebook has the most explosive potential." By signing Disguised Toast, he will stream exclusively on Facebook gaming, just like Corinna Kopf, a famous social media personality on both YouTube and Instagram. And she already has almost 500,000 followers on Facebook. We know Facebook doesn't commit half-heartedly to any new ventures, so I would not be shocked to see Facebook gaming pick up some traction really soon. But as always, despite viewing this as one of the most promising stocks out there right now and giving you 9 reasons why you should probably think about buying, I have to cover both sides. So now it's time for part 4, the risky risks involved with Facebook. I see 3 potential risks for Facebook, and I'm sure there are probably more, but these are the 3 that I could come up with, and I honestly don't see them being very probable. Nonetheless, let's talk about them. Number 1, another platform takes over. The world is always innovating. MySpace and Hotmail are things of the past because the world moved on. We've seen the rise of TikTok, which has exploded onto the scene. But could TikTok rival Facebook as a whole? Probably definitely not. Could it rival Instagram? Again, probably not. In fact, I see TikTok as a way to funnel more views and more interactions on Instagram because a lot of TikToks end up on Instagram. Facebook has a pretty big moat, but it only takes one, and I just want to make sure you guys keep that in mind that Nothing lasts forever. And sure, you can point to some companies that have been around for pretty much forever, but I almost guarantee you they're not the same company they were when they first started. And I don't think TikTok's going to come anywhere close to Facebook in pretty much any regard, but it's just a nice reminder that new social media is being made every day and new platforms can always take off. Risk number 2, privacy issues. Obviously, Facebook has been controversial in the past due to privacy issues, and I see this risk on a little spectrum. It can be anywhere from like a small fine to them losing a lot of data. And the small fine, even to a big fine, shouldn't really be a big deal. I mean, they were fined $5 billion and their net income was still $4.9 billion. But if they were to lose all their data, that would be horrendous. Facebook is basically just data mine. Pretty much their entire business model is based on data. Data? I barely know her. Oh my god. I need social interaction with another human, please. But let's say Facebook does lose all its data. Well, as we talked about in this video, Libra, Facebook Gaming, Instagram Shop, those are all ways that Facebook is diversifying its business, so it should be okay. Risk number 3, the final risk, is the total addressable market for Facebook. This isn't so much a risk that could cause them to go under, it's more of a risk that could cause them to stop growing. So let's say the world has 7.8 billion people. There are 3 billion active monthly users on Facebook. So that only leaves 4.8 billion left for Facebook to go capture. Well, at least 3 billion of that 4.8 billion does not have access to internet. So they couldn't join Facebook even if they wanted to. So there's about 1.8 billion people who, if they haven't joined Facebook by now, what's really going to make them do it? Or that 1.8 billion people are just not in the age range to be on Facebook. You're not going to see a 3-year-old on Facebook, and you probably won't see like an 80-year-old, 89-year-old man going onto Facebook and stalking his wife. So when will the growth of Facebook's user base start to slow down? Perhaps this is why Facebook and Google are racing to build an internet infrastructure for Africa. There are a lot of people in Africa who don't have internet access, but Google and Facebook have undertaken this massive project to give them internet. Why? They say it's for charity or for a humanitarian effort. And yes, okay, I'm not soulless. Obviously, this is fantastic. It's amazing that they're doing this, and it's really great for the world. But a business being a business, they usually have an ulterior motive, and that could be so that they can expand their runway and continue to gain more users. If you guys found any value in this video at all, please make sure to hit that thumbs up button. I spend hours on these and I love doing it, but I just ask 1 second of your time to scroll up or down and click that little thumbs up icon. Be sure to subscribe, turn on those notifications, come join our little family of financial independence advocates. And before we get into the quote of the day, make sure you go follow me on Instagram for daily posts about motivation, mindset, books, investing, all that good stuff. I'm also super active on there in the DMs, so if you want to
slide.
But as always, we'll end with the quote of the day. Price is what you pay, value is what you get. None other than Papa Buffett. I chose this stock because today we're talking about Facebook, and right now it's about 220 something in terms of stock price. But I think the value is so much more than that. But if the value of the company is way higher than the current price, then you should not really pay super close attention to the dollars and cents. You should pay attention to the value. And for the reasons listed in this video, I think Facebook has an unlimited amount of value that we can't even predict right now. I mean, I am very bullish on this stock, and I'm sorry if I sound biased. I did my best to tell you the risks involved, so I could kind of say both sides, but let's be real, this stock is sick. Oh my goodness, I try to be impartial on these things. Okay, anyways, I'm rambling. You guys know I'm not a professional, I'm not a financial advisor. Don't take my advice as the gospel or whatever. I'm not telling you what to buy. Do your own research, make your own decisions, be emotionless in the stock market. And with that being said, don't forget your peace and thank yous.